Hey traders, checking in on the stock market today. So a sell the news reaction to the gap up open, that's nothing new, but we saw continued weakness pretty much the entirety of the day. Let's look over what needs to happen for the bears to take control in the short term this week.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So we had a gap up open in SPY. That gap up was for profit taking. Again, this is nothing new. In 2020, gap ups far more often than not are going to see profit taking than continuation. We have a beautiful example. Last time we had a big climax top, and now we have another one. And again, if you just go back and look, there haven't been a ton of gap up opens, but it's been very consistent. Expect hourly consolidation when the broader market gaps up. We then had the bears control the entirety of the day, culminating in a high volume dump right into the close. So that is very notable to us, because if we were to come from here and drop and break our new line in the sand level, 363.26, we then you could say that we are then in a daily downtrend. Failure to break the all-time high and then a break of our support means zoom out, because weekly consolidation is then underway. The last time SPY has seen weekly consolidation, it's been a while. It's been 6 weeks. Anything on the weekly above 322.60 is a high or low. Bulls have tons of space to work with, but weekly consolidation at any point from here, even if we don't break this support tomorrow, should not surprise us, and that goes for a lot of sectors. Again, we can't just go up forever. High or low every week, 6 weeks in a row, is in jeopardy of breaking that pattern. So that's our line in the sand level into tomorrow. Tonight I'm watching the S&P 500 futures chart and the 4-hour. Can the bulls form a 4-hour high or low and look for an equilibrium? Or are we going to just roll over straight into a bear break, which in my opinion would require tech sector weakness as well. Today was very notable that it was the laggard sectors, XLF, XLV, that were leading the way to the downside, and QQQ was holding on much better. If QQQ rolls over and sees weakness as well, the broader market will see weekly consolidation begin. IWM hit a new all-time high today with zero follow-through. Line in the sand short term is the daily EMA 12, which has been holding for 6 weeks. And again, we just look for shifts, look for changes. What would change? If we lose that daily EMA 12, we can say this is unlike anything we've seen in the last 6 weeks. It's a changing market environment. So short-term support is 187.31, and if that level breaks, we're looking down at 180.32. If 187.31 breaks, we are likely to lose the daily EMA 12 support, and then we would zoom out and look for weekly consolidation. High or low every week, 6 weeks in a row. We've gone up in that period of time 26%. Weekly consolidation should not surprise us at all. QQQ holding on much better, but it can roll over as well. If we fail to break 308.60 and then drop down and break our line in the sand level 298.09, we will confirm a daily downtrend. And right now it is the tech sector that is keeping the broader market bulls hopeful. Because if the tech sector does not join our other sectors in weakness, we know it's not going to be a market-wide dump. We could still see it be weekly consolidation, but again, the significant bearish dumps have to see all of our major sectors dropping in unison. If QQQ pulls back tomorrow, but XLF and XLV bounce, then they'll be doing their inverse game, which they were doing for the majority of today. XLV, gap up open, pretty much a bearish engulfing candle. And I would still call anything under 107.84 a daily high or low. If you want to condense it to the 2-day time frame, make it a little bit more clear, all-time high, low of consolidation, lower high, and we're scouting a higher low compared to 107.84. Weekly time frame shows us that tightening range. We're still in a weekly uptrend, but that is a weekly lower high being set compared to the all-time high. XLF, gap up open, bearish engulfing candlestick. Candlestick? It's a sick candlestick. Daily EMA 12. We just closed under it today for the first time in 6 weeks. Weekly consolidation is underway for the first time in 6 weeks. We're looking for a weekly high or low. We have plenty of space for it to form, but weekly consolidation is underway with that inside bar bear break. Biotech sector, big upper wick of profit taking. These bulls were on absolute fire this morning, up 5% plus as a sector. Hourly chart, still in an uptrend, still EMA 12 support, and we would have to set a higher low, fail 150, and then confirm an hourly downtrend for the daily chart to get significant pullback, but a lot of space to still maintain the daily EMA 12 here. We could pull back 5% and still be above that level and still be in a daily uptrend. So the biotech sector bulls have a lot of cushion to work with to maintain their uptrend. Semiconductors, same as the tech sector and QQQ. Higher low on the daily is set, grinding EMA 12 but holding it. If we fail to break the all-time high of 221.79 and roll over and break 210.41, we confirm a daily downtrend, and we then zoom out and look at weekly consolidation for the first time in 6 weeks with tons of space to form the higher low. Look at that weekly EMA 12 guide over the last 6 months. It's been a beauty. We've got the daily guide. If it breaks, we got the weekly guide. TAN held strong today. That was a bit surprising. I was expecting it to be a choppy bull break from Friday straight into weakness today, but no weakness today. We're still looking at 88.35 as the most important resistance, and the bulls have plenty of space to be looking for a daily higher low compared to 79.21 next time we do consolidate. And that's a little mini weekly bull flag. Very brief consolidation and trying for continuation. So positioned well compared to the broader market, something to keep an eye on, as I'm not very comfortable with TAN watching its correlation to SPY. It's not something I do, whereas the other major sectors that we cover, it's literally staring at them for 95% of the trading day. The VIX with a solid close. That's what stands out to me. When's the last time we closed at the high of the day? It's been a while. It's been a couple weeks. Shifting momentum after building a base at 20. We know we're scouting a weekly lower high, but things are opening up a little bit here. After 25.10, we're looking at 27.30. And a little bit of momentum to the upside. So again, bigger picture, there are no red flags on this weekly consolidation whatsoever at this point. If we are going to start looking at red flags, we need all of our sectors dropping at the same time. We need high bear volume, and we need lots of hourly bear flags on bounce attempts. So in the absence of that, we will assume this is healthy weekly consolidation. So those are the clues that we're looking for to help us determine, should we be scouting weekly higher lows and looking for entries as bulls or not? The dollar, bear flag on the daily confirmed and a lack of follow through. So that's notable, but it doesn't mean anything to me unless we break 91.24 and break the daily lower high. If we see a bear break, no follow through, straight into a bull break, again, that would be notable for the shift in momentum, and our weekly bounce would be underway. If I'm a bear in this market right now, aside from everything that I just said that the bears want to see with volume in the sectors, they want to see the dollar get over this daily EMA 12 and break that resistance level. They want to see oil lose the daily uptrend. They want as many tallies in the bear column as they can put together to shift market sentiment. And there's lots of different pieces of that puzzle. And if the bears only get a couple of those pieces, like today was not a complete picture for the bears because QQQ was not seeing the kind of weakness that XLV and XLF were seeing. So it was an incomplete picture for the bears, not an ideal scenario. Bears aren't complaining, but if we're looking at ideal scenarios, bears need all these tally marks. So gold pulling back, keeping in mind we are just looking for gold to set a weekly lower high. A lot of people got a bit ahead of themselves with the size of this bounce and be like, oh, the gold bulls are back. We're just looking for that weekly lower high. If we can now hold 1764 and then break 1875 from here, okay, that's a weekly trend change. That has my attention. But as I talked about on this bounce as I was sitting on the sidelines, I need a weekly trend change to believe that the bulls are back in complete control. And a patient bull is waiting for an entry on weekly higher lows. Silver held on a lot better than gold today, but it's in the same boat. If we see a bear break of the low of last week, we then need to form a weekly higher low compared to 21.89 to try and change the weekly trend with a higher low and higher high. The miners started showing us a little bit of weakness early. The miners on Friday dropped to their low and lost the daily uptrend. The metals did not do that at that point. Now we have the miners closing at the low of the day. We filled this gap at 34.68, and it's all about 33.25. Can the bulls form a weekly higher low compared to 33.25? The bulls are not very comfortable in the metals and the miners with where we stand right now because, again, we're pulling back on the weekly chart. The dollar has not started bouncing. So we know that any dollar bounce from here is only going to add further, is only likely to add further downward pressure on the metals and the miners. Oil drew this 4-hour rising wedge this morning. We rejected from resistance and bounced off support after I drew it, so I love this time frame for keeping an eye on things. We're still in a daily uptrend. We still have daily EMA 12. If this 4-hour if this 4-hour rising wedge breaks bearish, we will lose the daily uptrend, we will lose daily EMA 12, and weekly consolidation will be underway. Again, that's one of the tallies that the bears in the market want to see. They want to see weekly consolidation everywhere. And we don't have it everywhere right now. We have it just starting in the first few places. The financial sector, the healthcare sector. Does QQQ follow? Do the semiconductors follow? Does oil follow? Those are the questions that we're looking for the rest of the week. Natural gas bulls getting really nice follow through. It was a 4-hour confirmed bear flag with a lack of follow through into a 4-hour trend change. So that's what the dollar bulls are hoping for. A confirmed 4-hour bear flag, daily bear flag with no follow through straight into a daily trend change. That's going to take a week plus for a daily trend change to try and shape up. But that would be best case for dollar bulls and market bears. If the dollar does not break 91.24, the dollar bulls prove nothing. So natural gas from here, patient bulls are scouting a daily higher low. Once we lose the 4-hour uptrend, we scout a daily higher low compared to 228. And then, of course, we need the daily trend change to shift momentum convincingly. So that's where we stand in the market overall. Let's keep an eye on the S&P 500 futures chart to see if the 4-hour higher low and tightening range can form, or do the bears follow through and break this support overnight tonight. 15-minute trend change back to the bulls is needed for a 4-hour higher low to be shaping up, and right now it's a potential 15-minute bear flag. Bulls would need a bounce, set a higher low and higher high, and we'll see if we get it. Today I was focused on LAZR, looking for a daily higher low to form after a massive bull move and a massive pullback. Same trade that we were looking for on PLTR a couple weeks ago that ended up going really well. Entered on the weakness, daily EMA 12, we just barely held it. I made one entry and sold at my target, which definitely left a bit of money on the table, but it was my best swing trade that I've had in at least a few weeks. So, looking to replicate that. After massive bull move and bear moves, we look for equilibriums. PLTR gave it to us. We're looking for the same thing on LAZR. So I made an initial scale-in entry at the end of the day Friday, and I made another couple little flips off the low of today, some short-term day trades to lower my break-even. At the moment, I've got a break-even somewhere around 27 and a comfortable position. So it's an hourly equilibrium where we've got the high of today, the low of today. We bounced 17% from the low of the day to the high of the bounce, and then we formed an hourly lower high compared to the high of the day, and then the weakness in the broader market into the close definitely led to a further pullback here. If we do not break this hourly equilibrium bullish, it's a red flag for this bounce. So pretty much must break 30.50 tomorrow or red flag. And I personally will be exiting if the bulls do not prove that break of resistance to us, keeping in mind that the S&P 500 itself can completely ruin this bounce setup if we were to see a lot of bear follow through and a gap down open and sustained bear pressure. Hourly downtrend is our guide, and we'll see if we get that bounce playing out or not. Have a good rest of your day. Hope you had a good trading day, and we will check back in tomorrow. See you then.